Nitin Rakesh joins in to talk about what he's made of this big market move. Nitin, morning. It's been a fantastic couple of weeks for the market. How much more would you give it, and where do you see it headed?
You know, it's been one of the best performing markets globally actually in the last 3 weeks, especially ever since the Japan issue happened, and that's a little ironical, but that's how it's been. I think what really happened was that it looked like it was the most beaten down market in the first 2 months of the year. So obviously there was some amount of value buying that came in, and then once that happens and people didn't expect it, so then you started to see short covering, and hence I think it's been a combination of both the factors. I think given the environment that at least I got a sense of in the last 2 days in New York, I mean, clearly investors are still kind of looking to see some better headline news coming out of India, more from a macro front or from the the governance issues that we are facing. So I think this is really a correction to what happened in the first 2 months. We need to wait and watch for the next triggers, quarterly earnings, monsoons, interest rates, and then hopefully resume the good environment that we had last year.
Nitin, morning. From the conversations that you are having, do you get the sense that most people believe that India has done its bit of punishment over the last few months and is ready to move on?
I think the response has been fairly encouraging. Again, as you know, this is India's first US equity-based fund of any kind, and the fact that we've chosen the Nasdaq 100 index to start an ETF, clearly means that we've opened up a new category of asset class for investors to participate in. So the response was very encouraging. We've closed the NFO with about 48 crores. We have almost 1,800 investors in it, 192 cities. More than 170 distinct advisors and partners contributed to the NFO. So clearly very, very widely held. Obviously we've within a week that we used the NFO for, we've managed to kind of create a certain brand equity.
What is the general refrain that you're hearing about Indian valuations now post the rally from your meetings with from your meetings with these investors?
I think it's at this point it looks like a little bit of a recalibration. I don't think at least I'm not getting a sense at this point that that trend will reverse quickly, because these trends don't typically reverse that fast. So I think it looks like at least for the next quarter we might see a little more balancing out, and it may not be as drastic as the first quarter when the rebalancing was very drastic. But again, I think the institutional market in the US is still more focused on the emerging markets. The retail investors in the US are more focused on developed markets, and I think that's really where we are seeing these conflicting signals right now.
It seems curious though, Nitin, that the market is choosing to do all this with crude being exactly where it was a couple of weeks back. I mean, NYMEX and Brent are both trading at that 116, 105 level. Has the market started factoring that in, you think?
I think some of it is priced in for sure. I mean, unless there is a much bigger shock on the oil front. I think oil at about $110, $15 is already in the prices. Clearly, at this point in time, there aren't too many fears of earning downgrades. But again, as I said, this quarter number will again reaffirm that. And if that doesn't happen, I think we might see the market kind of making a floor at the prices we saw about a month ago.
And what do you think? What kind of range do you think this market is good for or can justifiably hold?
As I said, I think people assume the market's going to be in a trading range, and I think we've kind of gone above the upper end of the trading range, and that surprised a lot of people. So, everybody had like a target of 5,650, 5,700. But again, it's very hard to call very short-term movements, and the nature of markets is that it'll surprise you. Also, the fact that this is a financial year ending, it's likely that we may not see a lot of selling at these levels, just to make sure that the levels are maintained at the end of the year. So I think it does look like to me that we are at the upper end of the trading range, unless there are new triggers that kind of take us beyond.
You've been talking to investors. What's changed in the last 5 or 6 days, Nitin? Can you pinpoint something which might have just swung the mood around a little bit? And do you have any sense of where the flows might have come in from?
Again, I don't know what's happened in the last 5 or 6 days given the market movement, but till about a week ago, it was hard for us to get investors to focus on the market unless it was a tax-saving product, which this isn't obviously. So I think the only focus last few weeks has really been on making the investment from a tax point of view. I don't think there was a lot of underlying interest in making equity investments, and people wanted to kind of wait and watch and see what happens on some of the macro things. So I think interest was fairly muted in equity generally. And a lot of that was reflected in the volumes on the markets as well.
Nitin, what do you think? Banks have been at the helm of this pullback. Would you give them more after the recent rally that they've seen?
I think banks, our sense is that most banks that have a strong liability franchise will be able to kind of protect their margins at best, have a few basis points of compression. So I think banks definitely look good to us. We still think that the banking sector in India is one of the best economic plays that you have, from a 3 to 5 year perspective. And I think anybody who had the opportunity to use the 30-40% correction in prices from the peak, should have taken the advantage. I think on the other side, the interest rate cycle is still, I think it's raising a little bit of question mark on the volume growth numbers of things like autos. And I think we've seen a little bit of that in the March numbers. We'll see what the month-end numbers show when they come out. If there isn't a much deeper impact, then I think the auto numbers auto sector will look good. But I think at this point, at least, the market is pricing in a slight slowdown in the auto sales based on the high interest rate environment.